I have with me Professor Pat Barron, who has taught banking and economics at a couple of universities, the last one, University in Iowa. And what we'd like to do is talk about the recent Swiss gold referendum that just occurred. Pat, talk to me first of all about the government. And so what's the point of a referendum in Switzerland, legally?
Well, in Switzerland, the referendum takes on the rule of law.
Okay.
It becomes part of the Constitution, as I understand it. So it's a very important thing. The Swiss are a very self-reliant and self-governing people, and the referendum process, although difficult to get a referendum on a ballot because it requires...
How does that work?
Yeah, it requires 100,000 signatures. And that's a big percentage of the voting population of Switzerland. So
Right.
It took a long time for the Swiss gold referendum people to get the required signatures, but they got it. And they just had the referendum. So if the referendum would pass, if it had passed.
So it did not pass?
It did not pass. It did not pass, and it wasn't really very close, which I can talk about here in a few minutes.
So what did this mean? Let's talk about the positive and the negative. Like, what would let's assume it would have passed. What would the implications have been?
Well, a lot of scholars, including myself, have pointed out that it would not have really changed a lot mechanically, I guess you would say, in the way the Swiss National Bank works. It would not restrict the Swiss National Bank in conducting monetary policy, for example. It was not a referendum to force Switzerland back on a gold standard, for example.
Right. Well, what would it have done, just very specifically?
What it would have done specifically, I view it as it would have been an opening salvo in returning some sort of monetary stability, because it would have told the Swiss National Bank that it could not sell gold. It has been selling gold,
Right.
and that any gold it got in the future, it had to keep. It could not sell, and it had to repatriate what gold was being held overseas at various other central banks, for example, the United States Fed or the Bank of England. So those are the three things that it required. It was really a referendum by the Swiss to let's get control of our gold, which the Swiss referendum people said belongs to the Swiss people, belongs to the Swiss nation. It doesn't belong to the politicians, whoever may be in power now. It doesn't even belong necessarily to the Swiss National Bank. They're custodians of the gold. It was the gold that belongs to the people, and the Swiss National Bank had been selling it. They sold about half of their gold reserves from their peak that they had about 15 years ago.
So if the referendum would have passed positively, what do you think the impact would have been?
Well, that's very difficult to say, but there were a lot of us who thought that, of course, all the national banks in the world have been greatly inflating their currencies. Mm-hmm. And even the sturdy, hard-working and independent Swiss sort of succumbed to the monetary debasement of the currency. A year or so ago, they linked the Swiss franc to the euro, so that it would require 1.2 Swiss francs to buy 1 euro. Because the European Central Bank had been debasing the euro, the franc had been sort of the currency of choice in Europe for people to send their money to. So they were buying francs. Well, this drove up the price of the franc, which is a good thing for the Swiss people as a whole, but there's a political class in all countries that benefits from a currency being weak, and that's usually the exporting class. Right. So the exporters in Switzerland they didn't like this because now Swiss products were more expensive in, say, euro terms than they had been in the past. So they lobbied the government and the Swiss National Bank to debase the Swiss franc. So what they did was they said, well, we'll keep the Swiss franc at approximately taking 1.2 Swiss francs to buy 1 euro. It had gotten down quite a bit below that. So now, as the European Central Bank prints euros, then the Swiss National Bank will actually print Swiss francs to buy euros, and so they're going to inflate their currency right alongside of the European Union's or European Central Bank's euro. And this is inflationary, but
yeah, sure.
This is what they're all doing now. Whether that was really the key to the whole referendum, I don't think so, because the referendum actually started well before a lot of this was going on. In my opinion, it was just the fact that Switzerland had been selling its gold. Swiss National Bank had been selling the nation's gold. This sort of hit, sort of a visceral thing with the Swiss, that, the gold is something that was theirs. It's something that will rescue them if there's monetary or financial or economic turmoil in the rest of the world. And the Swiss National Bank had been selling it, just as the Bank of England had sold a lot of the English gold during the Gordon Brown prime ministership. So I think that is what this thing was all about. Like I said, there are a lot of monetary scholars who say the whole campaign that arose in the last month that was really vilifying the referendum wasn't really, it was more propaganda, that the monetary authorities saw, well, we're going to have our hands tied somewhat. We don't want our hands tied at all.
Right.
At all. So they really vilified it, because who knows what this might lead to. It could have been a trigger for people to question their own country's central bank operations. Why, for example, are the English selling their gold, or why did they sell their gold? What happened to it? Well, where did it go? Well, I think it's gone to the east.
Right.
That's where it's gone.
I would agree.
So this is one of the things that for the last few months we've been watching as, if this passes, could this be a trigger of some sort that would cause a lot of problems? Well, it didn't pass, but I don't think it's going to go away, because I think the original problem was of the Swiss keeping their gold at home and getting their overseas gold that was held for them overseas, get that back in country. People are concerned whether it really exists overseas. The Germans asked for their gold back, and
from the New York Fed.
And the New York Fed says, we'll be glad to give it to you. I'm not sure they said we'll be glad to give it to you. Well, we'll give it to you in, how about 5 years? Well, really? Why can't you get it now? Makes you wonder whether it's really there.
Yeah.
So I don't think this is going to go away. I think we're just now starting to see the initial, in my opinion, this is the initial rumblings kind of from the public at large, rather than people like myself or you who are saying, there's a big role for gold. We've got to stop debasing currencies worldwide. I think now it's starting to get we're starting to see the concern of more astute populations, and there's probably nobody in the world more astute than the Swiss are, the normal Swiss citizen, as for the importance of money and finance.
Thank you. Thank you very much. Professor Pat Barron, thank you.